Joining me now is Brad Bernstein, Managing Director at UBS Private Wealth Management. Brad, welcome to the show.
Morning, great to be here.
So Brad, what will you be monitoring most closely when trading starts today?
I think today, in the next couple of days, markets are going to be in a wait and see mode for the biggest event of the week, which will be Jerome Powell's speech at Jackson Hole on Friday.
Okay, so the latest Fed minutes, speaking of Jerome Powell and the Fed, are due this afternoon. What do you think people will be looking for in the report?
It's very important right now to listen very clearly to what the Fed is saying. I think what we're going to see is more of the same. Some of the members are for rate cuts, some are not. That's why Friday is so important in the Jackson Hole speech. But our view is the recent data, especially the weaker July jobs report, strengthens the case for a new Fed easing cycle to begin in the month of September.
Okay, and what do you think investors will be listening for at Jackson Hole on Friday?
The tone of the speech. I think will Jerome Powell sound more dovish? I think we're still shell-shocked and remember 3 years ago at the speech that Jerome Powell did in 2022 when he was incredibly hawkish and the markets sold off dramatically for the next few weeks post that speech. So these speeches are critically important for the short-term movement in the markets.
So wholesale price inflation came in hotter than expected in July. Do you anticipate the inflation easing, or do you think it's going to continue to be a concern in the months to come?
Sure. So as we've been watching for the last few months, the markets have been on bated breath, watching to see any signs of the tariffs in the inflation data. Finally, we saw in the PPI some of the impact on tariffs, but it took months. With where inflation is right now, in the mostly in the twos, depending on the number you're looking at, with the job market starting to weaken, we think we're definitely in a place where, with inflation where it is, where the Fed can start cutting.
Okay, and what do you think today's economic environment means for the U.S. GDP? Do you think investors should be concerned?
Well, what we've seen is how incredibly resilient the U.S. economy has been, especially with recent data. Second quarter, we got 3% GDP. The Atlanta Fed right now is projecting about 2.5% GDP for the third quarter. When you look at corporate earnings, it was incredibly strong for the quarter, even though we have a couple more important names coming this week and next week. The vast majority, over 80%, have beaten on the top and bottom line. And then when you look at the monthly retail sales, which is critically important for our economy, because our economy is a consumption economy. 70% of GDP is consumer spending. Consumer spending was better than expected for the last 2 months, June and July.
Do you think that this market resiliency, we're going to see this last throughout the end of the year?
So I do. We see many reasons to be optimistic for the markets. We see conditions continue to improve going into next year, whether it's the resilient economy that we just spoke about, a new rate cutting cycle starting in September, the extension of the tax cuts with the One Big Beautiful Bill, which should increase CapEx spending, stock buybacks, and reduce the uncertainty of tax policy next year, as well as a weaker dollar. We all have read about and seen how the U.S. dollar has declined about 10% in the first half of this year, which, by the way, is a tailwind for S&P 500 earnings because it adds about 2.5% in EPS because of the weakening dollar.
I know you've mentioned you see value and opportunity when it comes to fixed income. What do you think investors should know about this area?
Well, interest rates right now are the highest they've been in the fixed income markets in 18, 19 years since the financial crisis. We see this as a window that will most likely close over the next year as the Fed is cutting interest rates. So we are recommending clients right now to add money into fixed income while they still can at these rates. We're seeing right now the market's pricing in about 125 basis points of cuts between now and the end of next year. We see 100 basis points of cuts between now and January. So in the next 4 meetings, we see cuts.
Brad, are there any like under the radar storylines you think are going to be making headlines across markets in the coming weeks or months?
I think just more data points on the resiliency of the economy and the consumer, and continued AI monetization driving the growth in the markets. And we have some important earnings coming out next week that we think will continue to demonstrate that. And I think when you look out in the next year and you look at all of the positives, obviously the tariffs are the uncertainty, but any more trade deals, especially a trade deal with China before the end of the year, could be a huge positive for markets that we're not even pricing in yet.
And Brad, anything else in the last 60 seconds that you think investors should be watching right now?
Any trade-related pullbacks between now and the end of the year, we would be adding to portfolios in these environments. They've proven to be great buying opportunities. So for any reason, if markets are nervous about some uncertainty related to trade deals and we get a pullback, as we've seen, we would be buying those and adding to portfolios, equities and fixed income.
Thank you, Brad Bernstein, Managing Director at UBS Private Wealth Management.